Investors and traders, welcome to the channel Market Chart Pattern. Today is 22nd of July 2025. Hope everyone is having a fantastic day. We'll take a look at the key technology stocks that we like to follow. My apologies, I've not been able to do regular videos, especially about the stock indices. But I've been writing on the Substack, so actually we'll just have a quick look at that as well. And if you like that, it's free. You can subscribe so that you don't miss anything. At time I'm not able to do the video, but I have recovered quite a bit, so this means that I will be able to do more videos for you guys, so do apologize. As always, the video is for educational purposes only. It is not a financial advice. So I'll just have a quick look at the S&P 500 first. So on the weekly chart, we have had a long-standing target of 6,500. The market is actually very close to that, and the high has been 6,336. So it's just a couple of hundred points, even less than that our target was missed thus far. However, on the nasdaq 100 NDX, it has completed this ABCD. So remember this ABCD while we were here in the beginning of February when this big drop happened. We did have this ABCD as the target. This is now a really big ABCD, going back all the way to the March 2020 lows. So these are the COVID lows, and the CD leg is actually a multiple of 1.272 times the AB leg. This is what CD leg is. It's gone right into this box that we have been waiting for, watching for as the potential target. So the Nasdaq is actually leading and has completed this pattern. So we need to be also, I mentioned previously, we are now moving into the summer months. This is where we have traditionally seen volatility come into the marketplace. So the typical cycle has been towards the end of July and moving into August, September, and we have seen lows in 2023 in October and 2022, which is kind of a genesis point where this market rally actually started in earnest. Was also in October of 2022. So the October seems to be the point where before the it's the Q4, but it's also just before the November. Then the market seems to form a bottom and rally from there. So the anticipation is for the S&P 500 to hit the 6,500 and even beyond that level. But there is a possibility as we move into this summer months, we could see some pullback come into the market, and it could be quite sudden as well. And this is something which I was discussing in the Substack as well, actually. So the link will be in the description. You can have a look. So here the most important charts are actually of the Bitcoin and also the Japanese yen. So the Bitcoin actually hit our the weekly target of 120,000. On the daily chart, we have 125 as well, so I think it's going to oscillate between this. So here the key point will be to keep on watching the 20-day moving average, because we have a completed pattern where the CD leg is actually extended 1.618 times the AB leg. At least I would see some consolidation take place. If I'm bullish the Bitcoin, especially on based on our Lucas time spiral charts, but because it has also completed this pattern, there's a strong possibility for some sort of pullback to happen. And especially this is why I'm watching the 110,000 level. Getting below this and especially breaking this level of 100,000 below the structure could mean that we could actually have a bigger sort of a pullback of this leg, maybe about 38.2%. That possibility is of course there, but the important thing is that the market did complete the pattern formation on the weekly chart. And then one of the things to also watch is that we have a really nice correlation, especially so this is the chart of Bitcoin and the Nasdaq 100, and the Bitcoin is this blue line, and the maroon line is the nasdaq 100. You can see there has been a pretty nice correlation between these two. Some in certain periods the correlation has been very strong, in certain periods not as strong, but generally if you look at this, the markets are bottoming around this October time frame of 2022, and then a nice rally, and this is where the Bitcoin was topping back in actually from the double top in 2021. And later on in November, the Nasdaq 100 also topped, and we saw a pretty big decline as well. So we have the completed pattern in Nasdaq, and we also have, or what I mean is, we reached our target, and we also have this pattern where 120,000 on the weekly chart has also been achieved in the Bitcoin. So we have two of those pattern completing our pattern formations, and now we are watching the price action. And here this is more of a shorter term look how nicely they are correlated from the 7th of April lows, these two markets. So this is why it's really important to actually keep on watching both of them, especially Bitcoin, because Bitcoin, I think, because it trades 24/7, especially on the weekends, we can get a lot of information from what is happening in the markets. So I think really important to keep on watching the Bitcoin. The other one is actually the chart of Japanese yen. And here I try to show the correlation between the Japanese yen and the 10-year Treasury note, and you can see that the 10-year Treasury note is in this maroon line, and the blue is actually the Japanese yen versus the US dollar. And you can see these have made peaks and troughs in near perfect alignment. So here you can see both these markets kind of topped, and then when the Japanese yen strengthened against the US dollar, the yields actually moved lower. And then when we have the dollar moving higher, the yields were also moving higher, and they formed a top close to each other. Perfect alignment of the top, perfect alignment of the bottom. This is also perfect alignment of the bottom, and then perfect alignment over the top. Now here the perspective is that if the US dollar is or the USD Japanese yen is likely to weaken, meaning the Japanese yen getting stronger, we could see the yields fall. But the other aspect of it with respect to the risky assets is such as stocks that last August, in fact starting from July or 11th of July of 2024, I believe when Fed had actually reduced their interest, they did their first rate cut. Just from the memory, I could be wrong, but there was some aspect like that. And what happened was we saw this pair move lower really quickly, and then with that we saw a lot of volatility coming into the market because of the unwinding of the carry trade. So what I'm trying to say here is such a situation can happen again. In fact, what we were watching for was this kind of pattern formation in the USD Japanese yen. So of course this was done over the weekend, and then today has been 2 days. So let's take a look at how the Japanese yen has been doing versus the US dollar. So here we go, and you can see this is the weekly chart. So it's down, it's just taking out the lows of the last week. And then let me go back to the daily chart. Here we go, and on the daily chart we can see actually that from this pattern formation we were looking for a little bit higher, but when the market opened on Monday morning, Sunday night, it just kept on moving lower. So maybe a little bit of support coming from the 20-day moving average, but this is sort of thing we should be watching for, because if this begins to accelerate, meaning that we have the Japanese yen really getting strong against the US dollar, then we could see that unwinding of the carry trade come back as well. So this is where I wanted to show 11th of July. This is when it really started. So really sharp decline, or the strength in the US dollar, Japanese yen versus US dollar. The pair was down about minus 1.79%. So this is the kind of thing we should be watching for. So these 2 days the market has come lower. Let's see how much. Let me do from top to bottom actually. So it's down about minus 1.59%, and we have the Fed meeting 30th of July. So around that time frame, let's just keep on watching this really, really carefully, because this is where we can see or spot early signs of volatility to come in the stock indices as well. And as we approach the summer months and these see some of these key dates with regards to the interest rates. Japan is increasing their interest rates, whereas the Fed is on a pause, and they might actually look to reduce, and then it depends upon the size of the reduction as well. So these are some of the things. Now let's get back to the actual topic. I thought it was good to actually have a look at these stock indices, because I haven't done a video on this, so my apologies for that. Now let's take a look at the stock of NVDA. And so the NVDA is down quite a bit today. It was down about 2.5%, which is quite a bit actually. And here we go. And I don't think we have seen in a while that in one day the stock actually lost this much in quite a while, at least in this rally phase since April, 7th of April lows. So here we are watching for about 170 bucks per share as our target. So the market had achieved our first target, and then we saw a decline lower or towards the bottom of the range, and then we had this upper target once it began to break above the 38.2% retracement, and then that has been achieved. So really take pride in saying that this was our target, and the market has achieved that target. So that's nice. So don't have any further price points for NVIDIA at the moment, but now I'm really carefully watching. Especially look at this break. It was 2.5%. This break right here was 2.92%. So I think what we should be watching for is if there is going to be some follow through or not. If there is a follow through, then this was just 2 days decline. It's already been 1, 2, 3 consecutive lower or negative closes, so it's already something a little bit different. But if we begin to get especially a break below the 20-day moving average, then I think what the stock is indicating that the characteristic is perhaps changing. So it might be more of a distribution event. Let's switch on the volume as well and see whether it is low volume or high volume. Looking at the volume, it's today it's just been a little bit above the average by the looks of it. So this is where NVIDIA, now we're just watching price action. Our objective has been met. The other one we wanted to take a look at is the AMD. So the AMD, one of the subscribers brought this to our attention. We did a long-term analysis of it. I think it was somewhere back around here, and we were watching for lower prices. We got a really nice low. I'll show that to you on the weekly chart. And then we have seen a very nice rally. The stock is up from the bottom quite massively. I think the stock is up 108% from the April bottom. Let me put it right here. So that's a pretty significant gain for the AMD. And the interesting part was that we were watching all along, especially for the signs of the break of the bearish symmetry, which broke down right here, and then we were really bullish once it got above the 120 level. So what we have seen is that there has been an impact in AMD as well as the NVIDIA pulled back. Now the NVIDIA pullback was more than 2%, whereas on the closing basis AMD is minus 1.45%. So what it is telling us is that AMD is perhaps a stronger stock at this moment in time, but nonetheless it can actually pull back further. And maybe even retrace all the way this entire move to 38.2%, so which will be around 130 bucks. So that sort of possibility is there. Now whether it will do this in A, B, C, D manner or some sort of complex formation, that remains to be seen. But there is a chance this market could pull back right into $130 per share level. And if we take a look at this on the weekly chart, here we go. So of course the week has just begun to only been 2 days. We can see that it broke above this level and now it's just consolidating right here. This is where we had so many of these patterns completing, and we have seen a very nice, very strong bounce out of it. So NVDA is actually looking good, very good. But during the summer months it can actually go into a pullback, just digestion, because of the massive gains the stock has had. So this is what we are looking at in terms of the monthly chart, and as long as at this point the low it made in back in April of 2025 is held, this is kind of the projection I made a long time ago for Tesla $500 stock. So this big ABCD pattern actually calls for 268 and even $320 per share level for AMD. Now, how long it will take to get there, I do not know, but we'll be following the pattern formations really carefully. And even in this leg, there will be places where there will be quite a lot of strong resistance. So, of course, it's just not going to be a straight line move up, but we will be using our pattern recognition and keep you guys posted about it. Now the other one is the Meta. So Meta is of course in the Magnificent Seven, one of our favorite stocks, but it's also reached our targets right about right here. And then what we are looking at is this market consolidating, pulling back. It closed below the 20-day moving average on two consecutive basis, so I think it's going to pull back further. There's a chance it could also do the entire retracement of this leg from April lows. So I think the Meta is actually in early phases of starting a pullback. And if you just take a look at this on the weekly, so you can see for 1 2 3 weeks just gone nowhere, and it could pull back a little bit further. These I'm going to remove these because these were retracement for this level right here. Now what is interesting is we do have higher targets for it, but it could actually pull back, and it'll be really nice if it does something like this and then it pulls back, something like this, and then so that's like a motive wave. So I think consolidation to pull back is something what could be expected for the Meta stock. Now let's take a look at what is happening with Apple. So Apple has been in a really long consolidation, but the interesting thing is just it's becoming more, price action is becoming more positive or bullish. And here the key thing is of course the 7th of April lows. I think one of the things with the Apple stock is with regards to the artificial intelligence, and of course the challenges with the supply chain. And maybe the investors are watching what sort of agreement could take place with China and stuff like that. But from a technical analysis perspective, this is our point C, and we have seen this being tested. As long as that remains, I think we are in this CD leg higher. And now we are at the top of the range, so it's possible in the summer months it just bounces top of the range to bottom of the range, remains range bound, and it's just been range bound for a very long for not a very long time, but for quite a long time, since the April lows, whereas some of the other stocks of Magnificent Seven have gone and made new highs, such as Microsoft. So I think the Apple needs to do quite a lot of catching up. So it could remain range bound like this, and could be just a higher basing consolidation pattern, and then ultimately Apple has surprised before as well, where it's been late to some technologies, but then it has come further. So maybe it could be something like this. And their supply chain issues sorted, but range bound formation, but it's looking much better now. And then let's take a look at the Tesla stock. So this stock is very volatile, just like the personality of one of the co-founders, Elon Musk. It's just my opinion, of course. And then what we are looking at, this is our point C. As long as this point C is held, our stance is we are in the CD like higher, but of course the stock has been range bound. This was the day, I think this was the biggest single day decline in the history of the Tesla stock, and it was also right at the 61.8% retracement. The next day, actually on that day, I did a video and mentioned that okay, we are actually pretty good support as well, and thus far the support has held. So just like Apple, I think it's going to be a little bit wobbly. It's going to be range bound. We've got earnings coming out, so that's going to be I believe the earnings are coming out tomorrow night after the close, so that will be another surprise. Upside, downside remains to be seen. But this point C is where we are really looking at in terms of this pattern. If the point C is broken, then the pattern formation changes, and we could be shorter term looking at A, B, C, D. It could also be this bigger A, B, C, D, which could take the price down much further lower. So right now we'll just go with point C because it's just not be broken right now as of this point. So that's what we are looking at in Tesla on the daily chart. And on the weekly chart you can see that it hasn't performed that badly. It's just in this big consolidation, and this is on the weekly chart where point C and the point D of this ABCD in blue points to 532, and on the monthly chart it's even more. This one is really for the investors who really believe in this stock. So we could be in this ABCD in the red one, which could take it to maybe close to 600. If this low breaks, then I think it's got an ABCD, which is going to take it down to somewhere around close to 100. So very, very important to watch what is happening. But this low that you see here is double bottom formation on monthly chart, so 2 consecutive months held this. This is pretty strong support, So this is what I wanted to mention about the Tesla stock. Now let's take a look at what is happening with the Microsoft, because Microsoft has gone and made new all-time highs. It's a very, very strong stock. This is the monthly chart, so I'm not going to spend too much time on it. We'll do that at the end of the month. And on the weekly chart, it had completed this pattern. We were watching for a pullback right into this 340. We didn't get exact 340. We came close, and the low was 344.79. And now this was a really important one. Why? Because it was right between the 38.2% and 50% retracement, but also the entire decline of the 2022 bear market. There you go. So we were actually getting bullish around this time. You can go and look at the archives, and then the stock has just not disappointed us at all. Met the first target, which is the 1.272 expansion of this entire trading range, around $500. I believe now it's just, if you look at just this, since the April lows, from the low of 7th of April to the highs, this stock has been up like nearly 50%. So I wouldn't be surprised if it just goes sideways and pull back a little bit and go through some digestive phase, and then it could have another, it could pull back maybe 30.2%. Let me try drawing that for you. So perhaps something like this, and then pull back right into this, and then maybe a little bit deeper as well. And then if it tries to take off, wow, that's gonna be massively bullish, and we could be looking at an ABCD. Wow. Yeah, and then of course the 7th of April lows, this is really key. Once this low goes, I think something will be wrong with the stock, but till then it's bullish. But we could see pullback, or consolidation at least, take place. Okay, now let's take a look at the stock of Google. Okay, so the Google, I think it's beginning to look much better now for Google, but we still have the potential of a head and shoulder, so left shoulder, head, and right shoulder. Since it's above the 61.8% retracement, that's good for the momentum, but it's really approaching the 194-200 level, which is the 78.6% retracement. It's got a scenario Now again, it's just if the head and shoulder pattern is in play, what we could be looking at something this um, like this, or ABCD, which could also, just like Microsoft, decline. The stock could decline or complete this entire decline of the 2022 bear market. Just 1 point, but with this kind of it's just looking quite strong actually. So at the moment there's just no consolidation or for any reversal thing, but that's just one possibility. Stock is looking strong right now. Let's move down to the daily chart, and on the daily chart we did see some weakness come in today. So that is like a hanging man candle pattern, and again this is the 78.6% retracement that I was talking about on the weekly chart. So here we go. So I think here what we need to be a little bit careful for is, let me actually try to draw a trend line like this, for example. Maybe there is a bit of a channel formation right here. So yeah, I think this 78.6% retracement could be resistance if the market on consecutive closing basis keeps on consolidating right here, maybe pull back. So let's keep on watching this, because that increases the potential of this head and shoulder pattern. So left shoulder, right shoulder, that sort of thing is there for this stock, so we need to be a little bit more careful with this one. Now the video is getting really long, so I'll have to just pick a couple. So let's take a look at rblx. Look at this rblx. So the rblx has done extremely well for us. It's just this has been very strong, very long consolidation for a very long period of time, and throughout this period we have been following. This is all in our archives. Our targets were met initially about 63 bucks, that was met, and then about 100 bucks, that was met, and now this is shy of its all-time highs. And then with this kind of an impressive move since April lows. So let's actually take a look at this. Wow, about 150% move, 155 nearly. The stock is likely to go through some digestive phase. So the way it has closed this formation is not looking very bullish from a candlestick perspective. Important thing is whether we see some follow through or not, because we have had this kind of situation right here, but there was just no follow through. So let's see if we get a follow through from here. But this one is looking not that bullish, because the low of Monday has been taken out to the downside. But let's see if we get further follow through to the downside or not. The chances are, after having this kind of a really impressive run, it's likely to enter consolidation and pull back. I wouldn't be surprised if the entire run is retraced by about 38.2% retracement. So let's just draw that right here. And the important thing I want to point out is this. Look how strong this trend is. This is 200-day moving average. This is 20-day moving average, and between them is such a big gap, and that was the force. And while it was consolidating right here, we were talking about this is the Wyckoff kind of consolidation. It's like a spring. It's coiling inside, coiling inside, coiling inside, accumulating, accumulating, accumulating. Finally, it broke out with a real meaningful breakout, and that's when we saw this strong trend. All along we have been following this stock, right? Now on the weekly chart, there we go. Initially we had a target of 100 bucks right here, and of course just gone way above that, crossed the 78.6% retracement. This is why I think the stock is pretty bullish. Maybe it retraces a little bit and then starts another motive wave higher. I'm going to remove this because of course it achieved that and actually broke through it like it didn't even exist. So that's how strong the stock is. But now I think it's likely to get into some consolidation. Now the other one, probably the last one I'll do, is the Z-scatter. Here we go. So I think Zscaler, after reaching our target, it has had a pullback of about nearly 8%. I mean, long-time subscribers. I mean, I'm not surprised our target was reached. This is the power of the patterns. This is the power of the patterns, but you have to follow them. So I think once it was our target was reached, one should be tightening up the stop losses. And now I wouldn't be surprised if we get a further pullback, and let's see what kind of pullback we get. Meaning we get like an ABCD or something more complex. But right here, this was a pretty complex thing. So my guesswork is we might, I'm stealing this from Elliott wave. So we have seen some complex correction here. So we might see some sort of simplistic pullback. So it might be just an A, B, C, D like this, and we could be done with that. But one thing I would like to point out is that the stock has actually not made a new all-time high. It came pretty close, so it still remains a retracement. Our pattern was complete, but if the stock has retraced this much, 78.6% retracement of the entire decline, that's pretty strong stock. However, not a new all-time high, so that needs to be kept in mind. So maybe it pulls back, build more energy, and towards the end of the year, this is where it might target this. We'll have to wait and look and see what sort of correction we get. So thank you very much for watching the video. Apologies again for not being not being able to post too much of the videos, but you can follow more on Substack. It's free. And yeah, I'm able to post the charts there. I will be posting these charts there as well, more charts as well, some of the stocks that we are not able to cover here on the Substack. So I would actually highly recommend that you check that page out, and if you want to subscribe, it's free. But you'll be able to look at some stuff which I'm not able to cover on the video, so I do apologize for that. Thank you very much for watching the video. Apologies, the video got really long as well, but we had to cover quite a lot of things. I won't take more time from you guys, so thank you very much. If you like how we are looking at and doing our technical analysis, please do subscribe to the channel, and if you do, then hit that bell icon button. That way you will not miss anything. So thank you very much. Good luck, good trading, and speak to you guys soon.